Let's talk with one of our favorite guests. That is Scott Sheffield. He's the founder and former CEO of Pioneer Natural Resources. That company has been sold. Scott doing very, very few interviews these days, and we'll get to why in just a second. I always like to joke that the best CEO guest is a former CEO.
Yeah.
Not because I love all of our guests, by the way. The oil and gas industry uses a lot of steel, a lot of aluminum, tubes, pipes, pipelines, whatever. What do you make of these potential tariffs?
I've seen tariffs off and on for the last 20, 30 years in my business in the industry. They come and go. But what happens when they put tariffs on, the U.S., in reality, the U.S. steel companies raise their prices. So higher tariffs by companies coming in, it raises U.S. steel prices. It costs us more to drill wells.
Do you think there are companies raising their prices without even having a higher price themselves, just because they can?
Exactly, yes. So it just happens. It gives them room to move prices up. So if you knew a publicly traded oil and gas CEO today, how would you respond to this? I hope that what Trump is doing is going to work. He's got 2 years to prove it with all these tariffs. I know he's trying to create more jobs in this country, and I hope he's right, but he's got 2 years to make it successful.
What do you think he's trying to do? What does Scott Sheffield think Donald Trump is trying to do?
He's trying to get more jobs here. Like we buy 17 million cars a year. 7 million comes in from outside. So he's trying to get more companies to make the products in this country, create more jobs. As simple as that.
Last time we spoke, I think there was 9 million barrels a day being pulled out of the U.S. I think it's 13 plus nowadays. I talk to people that say, listen, I don't disagree with the president, but I don't think we're going to be able to go up that much further in oil production. You were the biggest producer in the Permian Basin. Is there much more room to grow oil production above 13.2 or 4.4 million barrels a day in the U.S.?
Now, one of the main reasons that Pioneer sold, we had a choice. I felt like that we had to diversify. We were running out of Tier 1 inventory. Everybody's running out of Tier 1 inventory. Tier 1, the best inventory is going to be run out of Pioneer by 2028. Tier 2 by 32. So people don't talk about the fact that we're running out of inventory. And the question is, where is oil prices going? With what's happening with oil prices, with the Saudi move to add 2 million barrels a day over the next 18 months. You got Kazakhstan adding oil. You got Kurdistan adding oil. We got Canada, Brazil adding oil. There's too much supply in the world.
Can we add to supply and have lower prices at the same time?
At $50 oil, there's been some discussion in the Trump administration about $50 oil. What most people don't realize, we're at 50 already, inflation adjusted. If you go back 20 years, we're at $50 oil today. If we go to a true 50, you go back to 15, 16, U.S. production was declining in 2015 and 16. The break-even, cash break-even, including dividends for public companies, is $50 to $55 oil. At $50 oil, it's not going to work.